Okay, guys, this is the training session for second lecture, which is how to use candlesticks analysis and two chart patterns to spot entries within the market in conjunction with the first lecture by using support and resistance. I please confirm if you all of you have already seen the video of the lecture 2, guys. Please confirm all of you by saying yes to me. Great. Now, guys, before I commence this lecture, I just want to say something. You guys need to know the candlesticks patterns by heart, all of them. Single candlesticks patterns, double candlesticks patterns, triple candlesticks patterns. So guys, start working on it. Right? You guys understand what I said? You need to go, you can see on the screen, right? Can you guys see? Okay, you can go on baby pips, guys. School. Japanese candlestick. Drag all the way to the bottom, guys, and you see a cheat sheet there. Click on this. You need to learn this single candlesticks pattern, guys. All you need to know is the name, the nature of this of that particular pattern, and the candlestick shape. And that's all you need to know. Single candlesticks patterns, double candlesticks patterns, and triple candlesticks patterns, guys. So start working on this. Develop it day by day, guys. Understand. So though I do not use exact candlesticks patterns in my trading, it doesn't mean that you should use them. You must use them. Understand, guys? So learn all of them by heart. It's on the FIP file section. You will have the candlesticks there, files with candlesticks at categorization. Just download from there. Start working on it. Right? Two chart patterns every day. Two chart patterns every day. It won't take you more than 20 days to finish all of them. Understand, guys, what I said? Any questions? Understand? Good. Let's go. Now I'm gonna commence the section, the training session. Guys, how do we use candlesticks analysis to spot entries and exits within the market in our trading? Candlesticks. Now, candlesticks was introduced in the 18th century by a Japanese trader, a rice Japanese trader, to see the demand and supply within the market, to see the buyers and sellers behavior within the market. So he introduced this method, and he effectively traded this method for 34 years before he died, and then his family continued the same method. So guys, what candlesticks show you is buyers and sellers within the market. But that's what it shows you, candlesticks, guys. Understand, guys. Candlesticks show you buyers and sellers in the market, guys. Say full high. You guys understand? Say yes to me, guys. All of you say yes to me, please. Quickly write yes. Amani, I didn't see your yes yet. Amani. Where is he? Whose door? Amani's door. Okay, let's wait for him then. This is the most important lecture out of my all lectures, guys. And trust me, after finishing this training session, the homework that you will be doing is exactly what you need to become a profitable trader. The more homework you guys do, the better trader you'll become. So remember, very carefully listen this lecture. I am investing my strength on you guys tonight, though I'm very tired, just because you become profitable traders and make up your lives better. Understand, guys? So please keep your mind and ears open and listen to me very carefully what I'm saying. Amani, are you back? Give him a bit of time, guys. I want him to be with us because once I start the lecture, it's difficult for anybody who join me later to catch in between. It's a complicated lecture actually. It's fine, Les. As long as you guys become a profitable trader, it's fine. I will sleep after giving this lecture, and um, yeah, I have to. I do not smoke, guys. I just do shisha sometimes, and obviously this electronic vapor. Well, market is sort of friendly with me, to be honest. I had a great week on personal accounts. I made nearly £50,000 this week, and we made on a business accounts almost $264,000. So cumulatively, we made a decent earnings this week out of the stock market. So I'm very pleased. Though I didn't had plans to trade this week because remember the week before I made £54,000 in my UK accounts, and again we made $164,000 in our business accounts. So I had no plans to trade this week a lot, but then again trading was came out the setups was very clear and easy, so I just keep on nailing it. In fact, Amani, are you back? He's gone, I think. He's a man, I guess. Boston, he's a boy. He's a man, bruv. He's not a woman. Boston, you're a funny guy, brother. Okay, if he could listen us, then that's fine. Let's start again, I guess. Okay, I'm going to start now again, guys. He needs to see it. Listening is not enough, but anyways. So candlesticks, guys. I was talking about candlesticks. What does the candle represents? Now, candle represents a fight between buyers and sellers. Remember, guys, candle represents a fight between buyers and sellers. Remember when I was yelling in the first lecture, the price moves within support and resistance. Exactly. Now remember, candlestick represents a fight between buyers and sellers. Understand, guys? A fight between buyers and sellers. Remember this. And out of this fight, three things can happen. Three things can happen, guys. The first is what? Buyers win. So if buyers win, that candle will be bullish. So all bullish chart candlesticks patterns represents the buyer's victory. The second is the seller's win. All candlesticks, bearish candlesticks pattern represents the seller's victory. And the third is nobody wins. There's a fight between buyers and sellers and nobody wins. So if nobody wins, we have sort of neutral candlesticks patterns. For instance, spinning top, dojis. Understand, guys, so far? Clearly understand. Say yes to me if you guys understand what I said. I knew Boston you will say to me, say it again. Boston, keep your ears open what I'm saying. I'm not gonna repeat three times. Each candlesticks represent a fight between buyers and sellers, my friend. Buyers and sellers. That's you need to remember. When you look at the candle, remember there is a fight going on. Remember the candle keep on going up and down, up and down, up and down. What's happening? Buyers pushing the candle price up, sellers pushing the price down. Buyers pushing the price up, sellers pushing the price down. So candlestick represents a fight between buyers and sellers. And out of that fight, sometimes buyers win, sometimes sellers win, and sometimes nobody wins. Understand what I said? Thank God you understand. Okay. Now see this. Guys, the body represents the strength of the candle. Understand, guys? I'm talking about two chart patterns here. Engulfing pattern or Mazurula pattern, guys. A candle with a strong and big body represents the strength. The strength. Understand, guys? What it represents is this. It opens here. It opens here. Buyers push the price up, sellers were pushing the price down. Buyers keep on pushing the price up, sellers keep on pushing the price down, and eventually what happens before this candle closes? Buyers take the price here, and that is where the candle closes, guys. Understand? So who wins? Buyers wins. You understand, guys? Buyers wins because buyers were able to push the market from this level to this level. Sellers were trying to push the market down, the price down. They were failed and buyers win. Understand what I said? Who wins? Buyers win. This candle represents the strong buying strength. The buyers win. So this candle is representing the victory on the buyers with the for the buyers. Understand, guys? Completely understand? Tell me. Say yes to me, please. Now, candle opens here. Sellers push the price down, buyers push the price up. Sellers push the price down, buyers push the price up, and eventually sellers push the price down, and the candle closes here. Who wins? Tell me who wins? Boston, who wins? Better. Are you guys clear? So one of the chart patterns, Mazrula chart pattern, a candle with a big body, remember show the strength either for the buyers or the sellers, depend if it's a white candle buyers, black candle sellers. Understand, guys? Are you clear on this? 100%. Okay. Now, I'm talking about a candle with the wick. Guys, what this represents is this. I'm doing a commentary on the candlestick. This candle. The buyers, the market opens here, the candle open here. The buyers pushed the price up, sellers were pushing the price down, buyers were pushing the price up, and sellers pushed the price down at one stage. At one stage, the price was here. Sellers had full control on this candle, right? You understand? Because of this wick, at one stage, the price was here. This candle was like this at one stage. Literally, then buyers pushed the price up, buyers pushed the price up, buyers pushed the price up. And then what happened? Buyers pushed the price up, guys. And this candle closes here. So who wins? Buyers win. A strong victory for the buyers. Guys, this wick represents the failure on the part of sellers. Understand, guys? This represents the failure. The long wick will always represent the failure. And remember, the body represents the strength of the buyers. Understand, guys? Clearly, you guys understand. This is hammer. This is a hammer candle also. a pin bar. We call it hammer. We call it pin bars. It is a pin, a strong pin. A rejection. So it is a strong indication of the strength of the one of the participant. Bullish engulfing candle, a candle with a strong body represent the strength. The strength. Suddenly a strength came in, and also a candle like this with the wick represent a failure on the part of one participant and strength on the part of another participant. Understand, guys? Completely tell me. Say yes if you understand. Boston, Khan, Armani, if you're here. So that is these two candlesticks, candles you need to understand, guys. Remember, candles with small bodies are neutral candles. What is important is you need to wait for an engulfing candle, a candle which engulf has a big body, strong body, a long body. That's important, and a candle with the rejection. And similarly, guys, if this is like this, this means the candle opens here. Sellers push the price down. Buyers push the price up. Sellers push the price down. Buyers push the price up. Sellers push the price down. Buyers push the price up. At one stage, buyers push the price here in full control, and then sellers came in, pushed the price down, pushed the price down, and pushed the price down, pushed the price down, and the price and the candle closes here. Who wins? Tell me who wins? Exactly, the seller wins. Boston, you understand this? Very good. That's all you need to know. Okay? Two candles. Now the next thing. Two chart patterns I'm going to teach you. I'm going to teach you two chart patterns which you can use to enter the trade. Understand what I said? Two chart patterns. Give me a minute, guys. Okay, two chart patterns, guys. Double top and double bottom. Understand, guys, what I said? Double tops and double bottoms. Now I'm going to show you the example of double bottom first. This is your support level, guys. Price came down, hit support level, guys. Then price start rising. And price comes down again, guys. So guys, this is example of a double bottom. This is the first bottom, right? And that's a double bottom, guys. Understand so far? So normally what happens if there is a double bottom, guys? The price rises and then shoot to the upside. It is a reversal pattern, guys. If you see double bottom on the support, guys, there is a possibility the price will reverse. Understand, guys? Understand, guys, what I said? Now, remember, guys, double bottoms will always be like W, guys. One bottom, price will rise up. Double bottom, guys, rise. Understand? So it will be like a W, guys. Remember, write it down. Understand? Do you guys understand? Okay, Boston and everyone. Now see this. I'm gonna show you how you trade this. On the double bottom, guys, when the price hit around this level, first level, you never take a trade. Then if you see any bullish candle, reversal candle, because this is a support level, we're looking for bullish candle. So if you see a bullish candle here, you can take a trade. Let's say if I have a bullish candle here, this is entry number one. This is not a good entry, but it is an entry. First example of an entry. When the market came, I'm telling you exactly how to enter the market. Market came down, touched the support level, rises, and you see a bullish candle. For instance, you see a pin bar, a candle with the wick, or you see a bullish engulfing candle, a candle with a big body, right? This is your first entry. The possibilities are this: the price will go up and then start falling again, guys. Understand? You understand what I'm saying? The price start falling to the downside and it makes another bottom, guys. If it does not breach the support level, it stays above, it confirms a double bottom. Now wait for another candle, guys. Bullish candle. If you have another bullish candle, that is your entry number two, guys. So that's your entry number one. That is your entry number two, guys, after the double bottom on any bullish candlesticks. Understand, guys? After the double bottom on any bullish candlesticks. Now remember, guys, when the market came down and rises like this, you need to mark your trend line here. Reference line. Remember from lecture one. You guys remember from lecture one? Say to me if you remember from lecture one what I said. Always mark your trend line. So if the price breaks this and retest any bullish candlestick here is your third entry, guys. Understand, guys? Where is your third entry? Then you will stay in the trade. The trade is confirmed. The trade is triggered. Now, what are the reasons of this trade? The market came down to the support level, guys. Firstly, the first thing you need to wait to see any bullish candlesticks reversal. You see, okay, fair enough. That is your first entry. You can enter, but this is a weak entry. This is the weakest entry. This is the second strongest entry, and this is the strongest entry, guys. Normally, I would not advise you to enter here. Wait. No, you need a bullish candlestick. You cannot just enter. If you do not see a bullish candlesticks, Khan, Boston, the price will not go to the upside. You will see the price will break to the downside. Understand? If the price is consolidating here, making small candles, no bullish candles pattern is there, no bullish candle, no candle with a big body or a wick, you do not take a trade. Leave that because no buyers are not in the market. So if buyers are not in the market and the price is at the support level, we do not take a trade. We do not take a trade, guys. Understand? This is where you guys are making mistakes. A lot of people making mistakes. The problem is when the price hits a support and resistance level, they just jump on the trade. But that's wrong. You need to wait and let the buyers come in the market at support, and on the resistance, you need to give time to sellers to come in the market, and then only you take a trade. Makes sense what I said? Understand, guys? So price when breaches this is your confirm entry, guys. Excellent entry. Then remember from lecture one what I said. Mark your reference line. Do you understand, guys, what I said? Mark your reference line. Yes? As long as the price is above this, you will stay in the trade. Understand, guys? Say yes if you guys understand. This is your reference line, guys. Understand? Boston, Khan, Liz, understand? Okay, Amani, you are here. Able, good. Amani, are you here? Okay, Amani, I'm going to quickly show to you, I'm going to repeat this again quickly. Two candlesticks, always watch for two candlesticks. A candle with the big body, engulfing candle, right? Number one, and a candle with the wick. These are reversal candles. Understand, Amani? Say yes to me if you do understand what I said. Okay, now I'm going to show you exactly how to take a trade. Exactly how to take a trade. Now, this is your support level, Armani. I'm teaching you how to take a trade using double bottoms. Two chart patterns here with candlesticks. Double bottoms and double tops. Now, double bottoms looks like W, guys. One tap to the downside, price rises. Tap to the support again. Two bottoms, guys, and it goes up. Understand? Armani, understand? Okay, now see this. The price came down, guys, hit the support level. We will never enter the trade. We see the first bullish candle. That can be your entry. This is not a strong entry. This is not a good entry. This is an aggressive entry. The price can reject on. That's not enough. But then again, I'm just showing you guys, this is your first entry. Possible entry. The price rises and start falling to the downside again. Establish a double bottom. Always remember, on support, expect a double bottom when the price rises, touch the support, rises and falling, going back, convert the support again. If the price doesn't reach the previous low, and establish a double bottom, guys. Now you know the double bottom has been established. Do not enter the trade. Wait for another candlesticks bullish candle confirmation. So let's see if you got a bullish candle here. That is your second entry on the bullish candle. Understand, guys, so far? Now remember from my lecture one what I taught you guys. Mark your reference lines, because remember, price came down, rises. This is your reference line, right? Just mark your reference line like this. Once the price break this retest, and any bullish candlestick you see here, this is your third entry. Understand what I said? Understand what I said? Say yes. Okay. And remember, always have your reference line, a blind reference line, guys. Just put a blind reference line. Initially, it will be blind, right? It will be just like this. But then price will rise, it will go up and retrace to the downside. Wherever it retraces, retracement finishes, you connect this to that point, right, guys? And that is your reference line. And understand, guys, as long as the price does not breach this reference line, you will stay in the trade. In the trade. Understand what I said, Armani? Abel, you understand? Liz, Boston, Khan, you understand? There is no other way to take a trade other than what I've just shown you guys here. This is exact way of taking an entry. Exact way of taking an entry, guys. Understand? Okay. Now possibility. What is the possibility? Let's discuss the possibility here. Of course, I will wait for a retest. The price breaks this. On the retest, I will wait for a bullish candle here. Then this is your third entry. On this, after the double bottom is made, any bullish candlesticks, that's your second entry. Or this is aggressive entry. When the price hit the support level, suddenly rises, any one bullish candle, you can take an entry. So there are three possibilities of taking an entry. This is very conservative. That is okay. That is very aggressive. Guys, remember, this is the best entry. Always take an entry here. Do not concern that your entry is slightly away from the support level, because remember, guys, if this is a confirmed entry, the price will go up at least 50-60 pips to the upside, guys. You'll make the money. You will make the money. Understand what I said? I am teaching you exactly how to use candlesticks to take an entry, guys. Just give me a minute. Trust me, when I finish this lecture, you already watched the video exactly. You already watched the videos, guys. But when I finish this lecture, believe me, your confidence should be high. Stop loss. Now remember, your stop loss is here. One possibility is when the price goes up, price breaks to the downside and hit your stop loss. Right, guys? Price came down, rises, gone down straight away, hit your stop loss. So remember, every time if this happens, your stop loss will be very small, 30 pips, 40 pips. You're talking about 4 hours time frame. A very small stop loss. Remember guys, when you have a rally to the upside, it will give you 100, 150 pips. Always remember. So you will always exit the market very quickly. You understand? You guys understand? You will always exit the market with a small stop loss. So you have never have to be concerned. Clear? Amani, are you clear on this? Good. Now guys, I'm gonna quickly show you an example. Okay, whenever your stop loss is here, right? Let's say if this is the bad possibility against you, if this happens, the price came down to the support level. Let's say if you took a trade at point 1, the danger is this: the price will rise, and instead of instead of making a double bottom, it breaches the support level and hit your stop loss, right? So that is the possibility on the trade at this point 1. Therefore, I always suggest, and that's my recommendation, at least wait for the double tap. The price came down, tested, rises, do not enter. Let it test again. It rejects here and start rising. Now wait for the bullish candle. If you see the candle, that is where you enter. The price has established a double bottom, right guys? Then the price is rising now. Now the price is rising, right? It is rising. So you have this trend line here. The price sometimes even after the bullish candle touch this trend line, rejects and go to the downside. So you have to be very watchful when the price is tapping this trend line. Understand? And if the price breaks this trend line, guys, the trade is confirmed. The trade is confirmed. You understand, guys? Now see this. When the price rises, this is a new resistance, right? What I teach you guys? Mark your trend line, reference line. Price make another resistance, mark another reference line. So the price has to break this to go to the upside further. If the price rejects on this, the price will test this support level and may break this support level, means you need to exit your trade. The way I teach you, remember in lecture 1 what I teach you? You guys remember? Say yes to me if you guys remember. Amani, if you remember this. Remember guys, bridge your trade. We are bridging our trade. So we are bridging. Very easy. We're trapping the price action within support and resistance now to bridge our trade. Very simple. If it fails to go up, reaches this, then obviously the price is going to break this to the downside. Exit your trade. You guys understand this? I'm going to demonstrate on the chart, but do you guys understand this example? Clearly, any questions on this you can ask me now. Amani, Abel, Boston Khan. Let me read your question. I couldn't catch your question. Okay, if the trend line go hit middle and reverse, what we should do? Which one? This one. Look, let me tell you what. Price goes up and then falling, right? As long as remember this, you don't need to think about too much. Just follow the rules. As long as the price fails to break this, break is this, guys. Price breaks and retest. Remember what I teach you guys. Which trade you will open on this? You will exit your buy trade and sell it here, right? Did I not teach you this in the first lecture? Make sense? Make sense, right? The buy trade always retest. Yes, the buy trade is gone. Now it's a sell trade, right? You will exit this buy setup. Understand? Yeah, obviously retest. Yes, the price breaks and can come back inside again. So you do not want to be out of the trade if it comes back, right? Wait for the retest. I'll teach you exactly how does the retest works later. Any questions so far? I'm going to show you the practical example of this now. Any questions, guys? What I'm teaching you is very important, guys. Boston, what are you saying? Say it again. Write your question, please. Boston, speak up, man. Come on, speak up. Don't leave writing. Speak up. I'm listening to you. Go on. Of course, this can happen. The price can break at any stage. Remember, the price breaks here. Your entry was here. You might have made couple of pips, man. You might have made like 50 pips, 30, 40 pips. Exit your trade. You're controlling your trade. You're not thinking the price will go to the point beyond the sky. Wherever the price action suggesting here that sellers are in the market, get out of the market now. So you get out of the market. That is it. You follow the price action. Understand? Look, it does not mean double bottoms does not mean the price will go all the way to upside to 400 pips. Maybe the price start rising after 50 pips, it breaks and went to the downside. It happens. It happens with me many times. It happens. Trend line, the price breaks it, start rising, and suddenly start falling again. It happens. You will see the sellers came into the market, the price start falling. You get out of your buy trade, start selling it again. You need to follow the price. I'm going to show you exactly how you follow the price using candlesticks analysis. But right now what I'm trying to teach you is the layout of our trading plan, the layout, overall layout. You understand this layout, guys? Say to me, double bottoms, entry 1, entry 2, entry 3 after the break of the trend line. It start going up. Your reference line is a threshold. If the price breaks the reference line, get out of your trade. Understand, guys, completely. Say yes to me. Okay, great. Remember, guys, there is no other way of entering the market. This is the only way. You will see this happening inside out day and night. Give me a minute, guys. Let me put some juice for myself. Okay, let me show you an example on this. Guys, follow me very carefully on this example, please. This is what you need to be a profitable trader. Whoever listen this webinar very carefully, guys. Right now, I'm just using candlesticks, double bottoms, double tops, and support and resistance, guys, to enter the market, hold my trade, and exit the market. That is it. No Fibonacci's at this stage, guys. Remember, Fibonacci comes at a later stage. Right now, try to learn how to enter, hold the trade, and exit the trade by using pure price action. Understand, guys? Okay, 4 hours time frame, guys. Stick to 4 hours. I'm gonna show you guys. This is your support level, guys, right? Say this is your first bottom, right? Say the price came down. The price came down, guys. That is your first bottom, right, guys? That is your first bottom. That is your first bottom, guys. There is no bullish candlesticks yet. There is no bullish candle. This candle, I am going to do candle by candle analysis, guys, and I'm going to teach you how to observe each candle, right? Try understand, guys. Now we are looking for a bullish candlestick, right? A pin bar or rejection or a candle with a big body, right? We are on the support right now. This is the first candle, second candle, third candle. I've marked this. Now I'm waiting for it. No entry yet. I'm going to do candle by candle analysis, guys. Remember, this is exactly the you're trading live. I am examining each candle after she closes. So exactly that is exactly how you will be doing whilst you're trading on the live account, live markets, right? When the candle closes, you will decide exactly what to do. This first candle is slightly bullish, right? It fails to break the previous candle. Yes? Say yes when I say yes. There is a small rejection to the downside. Observe the candles very carefully, guys. Focus is needed if you want to be a successful trader. It is no joke. Every candle represents a fight between buyers and sellers. I already told you guys. Every candle. This is a small bullish candle. It represents the buyers had a victory, a slight victory. Remember, there's no signal yet that institutional buyers are in the market. Remember, there are two sort of things. Strong holders, weak holders. We want to see strong holders buyers in this market, guys. Strong holders controlling. Who is controlling this? Institutional buyers controlling this. There is no institutional buyers, guys. Like institutional reaction was, remember what I said, point of reaction. Institutional reacts to a certain point, a big reaction. That is what we want to see, a big reaction in the candle. But this candle represents what? A small buyers in the market. Yes? Little buyers, weak holders in the market. This is weak holders. This is a weak holders. The next candle is a bearish candle. Remember, guys, it's a bearish candle, but remember, it fails to break the low of the previous candle. Yes? Did I say yes? Follow me, guys. The next candle is a bullish candle. It engulfs the previous candle. It's an engulfing pattern, right? This candle has engulfed the previous candle, guys, and remember, it has failed to close below the previous bearish candle, right? And also there is a rejection. So remember, guys, the bulls are gaining in the market. The bulls are coming in the market. You understand what I'm saying? This is a bullish engulfing candle. It engulfs the previous bearish candle, right, guys? Remember, it closes above the previous low of the previous candle, and the previous candle is a bearish candle. But remember, it doesn't matter if it's a bearish candle. It does not mean the sellers are in control. It is just a bearish weak holders candle. Remember, this bearish candle has failed to close below the previous candle, bullish candle. Yes. So what it depicts, buyers are coming in the market and I am on the support level. But remember, I will not take a trade yet. I do not see any institutional buyers yet. Makes sense? But also these candles are telling me the sellers are not controlling the market. Guys, I control my trades on every candlesticks. I control my trade. I do not trade the way others does. That's why I'm very successful at trading. Now follow me. This candle This candle breaks the high of the previous candle, yes, and there is a strong rejection as well, right? Now this shows me more buyers came into the market. The buyers are gaining strength. Understand, guys? Then this candle, this black candle, is not bearish candle, guys. Remember, it fails. It is a candle where buyers take, how would I say, a buyers take a break and sellers, it's buyers remember, buyers are pushing towards upside, right? So they need to take a little bit of break. When you take a break, the sellers came in, the slightly bearish candle came in. Makes sense? But remember, this candle has failed to break the low of the previous candle, right? Right, guys? So who is in control? Say, who is in control right now? Good. Now the next candle is engulfing candle. Who is saying sellers is gaining momentum? Come on. It's sellers gaining momentum. Yes, that's better. Sorry, Les. That's good. Now, guys, see this candle. Again, a bullish candle, right? It is a bullish candle. Remember, this is a bullish candle, but it has failed to breach the high of the previous candle. So be careful. The way I say it fails to break the low of the previous candle is no bearish. Fails to break the high of the previous candle, no bullish. Makes sense? So wait for it. The next candle breaks. This candle shows bulls are gaining, buyers are gaining momentum. Yet there is no engulfing candle. This was a little engulfing candle, guys. That was your little engulfing candle. Remember, this could be your entry number one. This could be your entry number one. Remember, what is this? Rejection pin bar, right? A candle closing above the high of the previous candle. Yes. This could be your entry. Risky entry, but this could be your entry. Risky entry. Okay, go on. Let's continue the commentary, guys. This candle closes above the previous candle, right? Bullish. Now this candle may be bearish, but remember, this candle fails to break the low of the previous candle, right? And which is the controlling candle? Remember, guys, there is a controlling candle. Now remember, this was your controlling candle. You see this big bullish engulfing. This is your controlling candle. Now this is your controlling candle. The price has to breach your controlling candle for sellers to take control of this market right now. This bullish candle is controlling the market. This bullish candle. Understand, guys? This bearish candle fails to break the low of the previous candle. Buyers in control. This is buying. This is buyers closing above the previous candle. This black candle. Do not be scared. It has failed to close the low of the previous candle, right? It couldn't even break the low of the previous candle. It has to break the low of the controlling candle. This one. It hasn't. And then suddenly engulfing candle, right? Engulfing. This is the most powerful analysis that I'm teaching you right now. Today, what I'm teaching you will change your destiny as a trader. Trust me, guys, and this is the basic analysis I'm doing. I use extreme analysis on extreme analysis. This is a basic I'm teaching you, but that's all you need to know to be a trader. Now, this candle, guys, closes above the previous candle, right? Bullish. Now, this candle, now you must be scared of this candle, right? This is a strong reaction. I decide after the close of the candle. Understand? So this bearish candle, what should you do? Shall you close your trade? The question is, should I close my trade after this candle? Now, this is the question. Let's consider this. Guys, if you have, Liz already knew this because she already attended my lecture. Price is rising. Candles are making higher highs. High from the previous candle, right? Then you suddenly have a bearish candle, one bearish candle, major bearish candle. We do not close our trade, guys. We need to see a follow-up candle, which is another bearish candle closing below the previous candle. Make sense? If we see this, then we will exit our trade, guys. Remember, this candle has to be a good, significant bearish candle. If it's not a bearish candle closes like this, we will stay in the trade. Make sense? Has to be significant. Now just see this. This is a significant candle. It means, Khan, that the sellers took control over the market. But see, this candle was bearish, but then guys, the next candle has failed. The next candle is not a follow-up candle. This candle, you see this rejection, the wicks. We want to see a good bearish candle, guys. Strong bearish candle. This wicks represents weaknesses on the seller's part. We will stay in the trade, guys. You understand? This candle closes almost above the previous candle, right? It couldn't break the wick. Yes, not just break the previous candle. It has to be a strong bearish candle. Strong bearish candle. And then see what happens, guys. This candle fails to close below the previous candle, right? We stay in the trade. This candle bullish, closing above now again. All these candles fails to close below the low of the previous candles, right? So on all of these candles, we will stay in the trade, guys. There is no indication that sellers had came into the market, guys. There is no indication yet. The sellers came into the market yet. So the only indication is the buyers are in control, but not significantly yet, because there is no significant buying candle we see. We haven't seen a buying reaction yet. But what we are looking on this is this, that sellers, no institution sellers are either controlling. So what's happening from the support level? Weak holders, buyers are taking the market to the upside, right? Understand, guys? Now remember, I talk about double bottoms, right? So guys, remember this. If the price start coming down, do not be scared, because you're expecting a double bottom here at the beginning of your trade, right? So do not be scared if the price comes around these levels. Okay, we are in our trade, and then what happened? This candle, right? Remember, we decide after the close of the candle. So what happened here on this candle? Huge bullish candle. This is called strong holders. Strong holders, buyers enter the market. It is confirmed. The buying trade, buyers have entered, the institutional buyers have entered into the market. You understand, guys? Now, guys, remember all these candles. What were these candles? These candles were consolidation. But if you know how to read the candles, you will see within these candles that the buyers were gaining momentum. You understand? They were gaining momentum. They were gaining strength before institutional buyers come into it. Makes sense? And exactly that what happened. Yes, suddenly burst to the upside. So we are here now, guys. Market, we are here. Now let's wait. Now remember, use your trend line, guys. Right? And then this. Right, guys? Now the price breaches this. And this is called a retest. Closing above means if this candle has gone up and the next candle has came in, no retest. The next candle closes above the support level, right? This is your support, reference line support, right, guys? Understand? Now we are in the trade. Now this candle closes above the previous candle, right? So buyers are in the market. We stay in the trade. Now remember, guys, important. Mark your reference line always like this. I mark this line just with this point. That is it. Nothing else. Understand, guys? Abel understand. Khan understand. Boston understand. Liz understand. Say yes. You guys enjoying it? Understanding it, right? Sorry, Saiful, I always forget you actually. Now, let's continue the practice exercise. This will change your trading, guys. Trust me. This is my own philosophy of trading. I came up by looking on the charts. I said, let me try do something different. No book will talk about this. Al Brooks talk about this. This candle is bullish, guys. No reason to close. The color suggests, right? The color is telling me it is bullish. Remember, you'll have colors. When there is a white color or a green color, it means it closes above the previous candle, and that's why it's bullish. It's showing the white, the green color, right? You know this basic thing. Why the candle is green, right? The next candle again green. I'll stay in the trade. There is no sellers into the market. People might think, okay, maybe sellers are coming. These are dojis. Market may reverse. Bullshit. Market will reverse when the sellers will come into the market, right? Then what happened then? What happened? See, right? Engulfing. That's right. That's engulfing. No, this is where we are. Stronghold. This is your controlling candle. Remember, this is your controlling candle. The price has to breach the low of this candle. Then the sellers will take control. Right now, remember, keep on marking. This is the second controlling candle. Now you've got the next candle is bearish. It's a hanging man, sort of hanging man, right? So the question is, shall I close on this? Hanging man is a reversal pattern. Bullshit. That is for us lots to understand. You should not close. Remember, this candle has failed to break the low of this candle, right? Can you see? It fails to break the low of this candle. Buyers in control. What's happening now? Understand, guys. The buyers have made this move. Now they are taking a break. When the buyers take breaks, weak holder sellers came into the market. Understand, guys. And remember, we want to see if strong holder sellers are into the market. If they come, we'll exit the trade. Understand? Remember, guys, this is your reference line. As long as the price is above this, this is a buying trend. Now, this is a buying trend, no selling. Understand? Overall, I'm teaching you guys. I'm teaching you exactly how to do a swing trade, guys. This is a swing trade we are taking right now, right? Candle by candle analysis. I'm not scared. All I do is look at the candle every 4 hours. Okay, next candle. Every next 4 hours. Okay, next 4 hours again. That's why all I do if I'm doing a swing trade. Make sense? Now, guys, let's start the interpretation again. But before this, very important. Remember, guys, what I teach you. You need to mark your trend lines. Understand? Now remember, there is a reference line, right? You mark your reference line on the top of this. Because remember, the price is here. Right, guys? Right? Now, price has to break this to go to the upside. If the price fails to break this, then price is going to this level. Remember, this is resistance and that is support. Exactly, that is what I teach you in the first lecture. Yes? Now, let's see. Go back to candles now. Let's see if any candle can tell us. The first candle is not bearish. The next candle is engulfing bearish, right, guys? But remember, it fails to break the controlling candle, this one, right? We want to see a follow-up. No, we have seen this. We want to see this, guys. We want to see this. If this happens, I will exit my buy trade. Maybe I'll exit my buy trade, or I want to stay in the trade because remember, price will go like do this, and this. Makes sense? Remember, but I will change. My reading will change. My reading will suggest me if I see this that sellers have started coming into the market. So obviously my reading will change. Obviously, if this happens. But remember what happened the next candle. It's a small candle. No follow up, right? Say yes to me if I'm saying right. I need to understand on each candle you guys has to write yes. This is a doji candle, brother. These are the doji candles. But read the candles. This candle has failed to break the low of the previous candle. This is the problem with everybody. You see doji candles, you get scared, you get out of the market straight away. Neutral candle. Bullshit. What's happening is this. The buyers are taking a break. Therefore, when the buyers takes break, weak hold sellers came into the market, and market make a correction, a slight move to the downside. We need to see a strong hold sellers. See, this candle fails to break the low side. This candle, bearish engulfing, was this. We want to see a follow up, right? Like this, Khan Boston follow up, right? Like this. Leave dojis, man. Leave the dojis out of the equation. Leave the dojis. I'm not talking about dojis here. Read the candle, what the candle is suggesting you. Leave the dojis. Remember, see this. You've got this bearish candle, engulfing candle, right? We will exit the trade when there is a follow up. The next candle breaks like this. You understand? But look here, the next candle hasn't follow up. The next candle was just right there. Can you see? Not even break the low of this candle with a significant bearish candle. Makes sense? Makes sense, Boston. Candle has to break like this. So we will stay in the trade. Buyers are still in the trade. It is telling us no sellers, institutional sellers. Next candle bullish, closing above. Next candle closing above the previous candle. It has failed to break the low of this candle, right? Buyers in control, and next candle again closing above. So buyers start coming into the market again. And then it breaches this level, yes? That's your third reference point. Now, every candle which I'm marking could be your entry, guys, or further confirmation that what's going on within this, right? Understand, guys? Now, next candle, let's see the retest. This candle fails to break the low. We will stay in the buy trade. Next candle, bullish, bullish, bullish. This is a bearish candle, but no follow up, right? We want to see this. No follow up. We will stay in the trade. A lot of people normally exit their trade. Normally, yes, everybody exit their trades on these candles. You do not have to exit the trade. No candle, all candles bullish. Fails to break the low, right? And then suddenly what happens? Spike to the upside, another spike, right? Then we arrive here. Guys, remember, always have your reference line like this. Make sense? You'll mark your reference line. When the price will reach here, you'll mark your reference line. Yes? Now remember, guys, go back to lecture 1. You will have this. You understand? Remember, guys, remember something. This reference line is This is the bottom line. If the price breaks this uptrend finishes. Understand, guys? This is your reference line. Understand, guys? There's always a possibility the price will go to test this support level and rise again. Remember, so you have this reference line. The price breaches. Now the price breaches and retest. That is your sell entry. Remember, guys, remember something. If you are a swing trader, you will not close your trade. Normally, swing traders will not close their trade. Understand, guys? Normally, swing traders normally never close their trade because they stay in until the leg is continuing, until the leg ends. They stay in the trade, right? So, as a swing trader, you won't get out of the trade. But let's say if you get out of the trade, how many pips you've made? You take an entry here, let's say. Guys, 229 pips you've made, and your stop loss was not even 40-50 pips. Make sense, guys? I made this 225 pips whilst controlling the market. Whilst I was in control of my trade on each candlesticks, I was not on the mercy of the market. Yes? You understand how I control the trades? I exactly knew who was controlling the market, guys. This candlestick is not a joke. This was originated in the 18th century by an intelligent German man. That's why I really like the German ladies, by the way. The Chinese eyes really fantasize me. I have sort of thing for them. No offense to you, Liz. Okay. Good you didn't hear that. Leave it. If you didn't hear this, it wasn't nice what I said. Okay, now guys, let's say I have this swing trade continue going on right now. For instance, it's up to you. You want to close the trade? Let's close the trade. Now the price breaches this. I'm going candle by candle analysis, guys. So please, it doesn't matter if it's a live market or it isn't a live market because I'm doing candle by candle analysis. You understand what I'm saying by saying this, right? Amani, Boston, all of them, Abel. I'm getting tired, man. Give me a minute. I have tomorrow. My voice is going away. From next week, I'm just giving lectures 2 days a week. That is it. I'll let you know tomorrow on Sunday. Announce those days. You guys will have to make yourself available on those days. The problem is every day giving lectures. I've got so many groups that I have to sort this out. Uh, So keep on speaking again and again is really tiring actually. Okay, guys, this is your stop loss. This is a break and this is a fail to enter. Fail to enter, right? Boston, lecture 1, fail to enter, right? This candle. So this next candle can be your entry, guys. If you entering here, remember this is your support level, right? Mark your reference line. Blind line like this for now. If the price breaks this, you exit the trade. Very simple. Small stop, small loss. 40 pips. If the price breaks this, remember guys, the price breaks it. Now this candle is bearish. Let's go again. Now this candle was bearish. The next candle closes below the previous candle, right? Fails to break above the previous candle. Bearish, bearish. This candle fails to close above this candle, right? So it's sellers in control, sellers in control, sellers in control. This is not a bullish candle, guys, because see this candle fails to break the high of these previous candle, right? Who is in control? Sellers in control, right? Sellers in control, sellers in control, sellers in control, sellers in control, sellers in control. This candle rises, sellers still in control. This candle suggesting by no means the buyers in control. We want to see a bullish candle and a follow-up. And remember your reference line. Your reference line, you just draw your reference line straight like this. And then what happened? Market tested this, boom to the downside. Can you see, guys? Can you see this? And then the next candle kiss your support level, right? You can exit your trade here if you like, if you want to. On this candle, you can exit your trade based on overall setup. If you remember, this was your counter trend trade, right, guys? Because the trend is to the upside, the layout is to the upside, right, guys? Counter trend trade. So see how many pips we made. 147 pips, Amani. Able. Stop loss was 50 pips, right? That's normally stop loss is 50 to 75 pips. 100 plus pips on normal setup. Any questions so far, guys? Any questions? Let's continue the journey. Yes. Yeah, they say that I am a great teacher, by the way. Yesterday, one of the girls was telling me, I haven't given her a lecture yet. She just signed me. She's a dentist in London, uh, from Lebanon, I think. Uh, so she joined me and she's heard my lecture, the first lecture when I was yelling about the price move within support and resistance. The first lecture, she emailed me yesterday saying that she had a dream after she listened to my lecture that I'm yelling and saying there is support and there is resistance and price is moving in between them. So I said it's a good indication that that you're taking my lectures seriously. And the phrase that I say is obviously that if that is things you need to remember always to become a successful trader. So yes, I think I have the capacity of conveying the message pretty effectively, not only here, but also when I work in the Crown Courts before the judges and the jury. They call me Fox there. I'm very effective in conveying my representation instructions from my clients. So yes. So let's continue. And trust me, this is far difficult than the practicing as a lawyer. To be honest, to be very honest, this is far difficult. Because this is testing your nerves far greater at a greater extent than being practicing before a jury. Anyways, continuing. Now, guys, price here. Price. This is what is this candle? Strong rejection, right? That's your next entry. All the candles which I've marked like this can be your entries, guys. Now remember, always adjust this. Understand, guys? From lecture one, price has to break this, go to the upside, right, guys? And price, if breaks this, it goes to the downside. Simple, right, guys? So if you take an entry here, you can take an entry here. Stop loss has to be around this level. Small stop loss. Next candle, what happened? Let's observe the candles now again. Shit. This candle is not bearish. You know why, right? You guys should know why I'm saying this candle is not. The sellers are not in control. Buyers are in control. Okay. This candle fails to close below this candle. Small body. Buyers in control. Buyers, 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 buyers. Right? Understand, guys? See these rejections to the downside. None of the candles have shown me this. I want to see this. I want to see this to get out of this trade. Yes, guys, understand? Abel, Amani, Boston Khan. This is first bottom. That is a double bottom, guys. The price make another bottom here. Can you see? Right, guys? All I want to see if the price breaks this, guys. None of the candle breached the low of the previous candle, and then price breaks this. Now, guys, this is what? This is a break. You never enter on the break, guys. Retest, and that is a retest. You see the candle closes above this. That can be your entry. The next candle closes above the previous candle, bullish, buyers, 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 right? Then the sellers came in. Now this is harmonic pattern, harami pattern, right, guys? Normally, what is harami pattern? Harami pattern is a reversal pattern. So if you take a reversal pattern, would you take a trade on this reversal pattern? I would never suggest a trade on this. Remember, this candle fails to break the low of the previous candle, right, guys? Yes, it is at resistance. That's why I'm expecting the price to tap to the downside a little. And there is a support here. So I would not like to sell when the support is near and I'm in an uptrend, right, guys? Let's say next candle fails to close the low of the controlling candle. This is your controlling candle, the bullish. This candle again, bearish candle, again, bearish candle. Now this and this candle, guys, is not this. Tell me why it's not this. Anybody can tell me why. This is not a follow-up. Tell me why, guys. No. Exactly, exactly, exactly. Remember, guys, this is your controlling candle, right? This is your controlling candle. The price They could not break this controlling candle. Can you see? This is not your controlling candle. That is your controlling candle. Price has to breach the controlling candle. Always remember, this was your controlling candle. This has failed to breach the low of this controlling candle, guys. You stay in the trade. Very simple, simple rule. Yes. And then next candle fails to break even this previous candle. Means buyers are sustaining. Next candle closing above, next candle closing below. Again, fails to break the low of these candles. I haven't seen this yet. Market push to the upside, right? Push to the downside. Fails to break the low of the previous candle. Now this is your controlling candle. This is example, guys, when the price, this is a breakout, no retest. Breakout and market price came down. Can you see, guys? This is why I always say always enter on the retest. Breakout, next candle came inside again. Can you see? These candles again fails to break the controlling candle, right? People will say on these candles start selling. They are weak. Start selling, start selling. Remember, they are bullshitting. They don't even know anything. Go on, Liz. Okay, which candle? This candle. This candle. This candle. Okay, Liz, I'm opening up your I'm opening your voice. Speak up. Give me a minute. Okay, Liz, speak up. What you saying? Tell me which one.
Where you have the purple shaded box? See
This
the
one.
purple shaded box? Yes. Now, if you go to the
Go to what?
3, 4 candles to the left, to your left. 1, 2, 3, 4. That one.
This
Did
one.
that not break?
This one.
Next, yeah, the one on the right of that.
Yeah, this one, right?
Two more to your right.
This one.
Go to your right. One more. That one.
No, Liz. Liz,
Not that one.
yeah, this one, right?
The one to the left.
This one.
Next to it. Yes.
No, it hasn't. See, this candle closes just here. Can you see this? Almost.
Yeah.
You need to see a substantive break like this, proper. Not like this, not like this. You need to see a substantive
Right,
break.
not enough. Yeah.
This is no substantive break. Okay, this was substantive break. This was look like a substantive break. See, this candle was a
Right.
complete follow-up. But remember, this was the controlling candle. It fails to break the controlling candle. It's almost there, right?
Yes.
So no point you're closing the trade. And also, you need to see the overall scenario. You are at resistance. The price will come to a certain extent to the downside. Remember, and support is here, right? And price just breached the previous trend line. So see the whole picture. But remember, strictly speaking on candlestick analysis, this candle hasn't breached this. If it was like this, Liz, I might consider sellers came into the market. Then you might see the continuation like this.
Mm-hmm. Right.
Guys, you understand this point? Everyone understand completely? Any questions? You need to understand this, guys. It's significant. Exactly. You need to see institutional selling, not weak holder selling. Because right now, institutional strongholders, buyers are controlling the market. Where are strongholders? This. Makes sense? Have you seen a sell of this strength? No. Have you seen a sell of this strength? This sell is not strength of this candle, right? Look at the body. Look at the body. So institutional sellers are not there. Makes sense. Make sense? Now, guys, price this I'll buy here. The price breaks this, right, guys? Boom to the upside, right? Institutional buying is going on, right, guys? I always mark my reference line, always. And then price went up. Price went up. See, a lot of people will close their trade on this. A lot of people will close the trade on this, right, guys? Wick, let's close it. Let's close it, right? That's what everybody does. Come on, man. Look at the next candle. Closes, fails to close below this candle, right? Fails to close below this candle. Fail to close below this candle. These two candles fail to close below this candle. Makes sense? Then again rises. Again, close above, above. And that is where you close your trade. And remember, guys, what I said. Reference line, right? You will stay in your trade, guys, on these candles. You can still stay in your trade. No, there's no breakout yet. There's no candle reversal signal yet. But guys, because the price breaks this and retest, that is where I might close my trade. Understand, guys, why I close my trade? Go back to lecture 1 straight away. Make sense? Now let's see how many pips we made on this trade. We took an entry here, guys, on this W. Let's say we close our trade here 218 pips, guys. Stop loss was not even 45 pips. Make sense, guys? Stop loss was 50 pips. How many pips you guys we made? Exactly. Every trade on 4-hour setup is around 1415 guys. Keep five. I'll teach you in the last lecture how to approach the market. 5 trades. Think of 5 trades, then evaluate your trading. Not on one trade. You will always be in profit, guys. Without any fear, you will be in profit. You guys understand so far what I've been saying? 100% you guys understand, right? Any questions, guys? Guys, this is the way to use each each candle to evaluate the market condition. See who is controlling the market, buyers and sellers. And remember, who is controlling the market is strongholders holding buyers or sellers. And then when either which candles are weak holders. Weak holders are retracement candles only. We do not be concerned on that. Guys, understand completely. I'm very tired right now, but just say to me, understand. I wanted to give this lecture. This is the key lecture you need to go through, guys. You need to practice this on your charts. And remember, you don't need a live market. Live market. You don't need a live market, guys. You know why you don't need a live market? Because you're doing candle by candle analysis. Exactly that would you be doing on a live market. Your analysis will be based once the candle closes, right? So there is no difference between this analysis or the live market, guys. Make sense what I'm saying? Make sense, guys? I'm gonna show you exactly why I holded my euro yen trade, guys. Quickly, I'm very tired, but I'll show you quickly on this. 4 hours. Go to 4 hours. He is late, man. Anyways, guys, let's go. Right, guys? You guys, the question is, everybody ask a question. When should I take a trade? You know when you will take a trade? When institutional sellers come. This candle confirms the sellers came into the market. Make sense, guys? This is the first time. So if you take a trade here, these are aggressive entries. It can kill you, burn you. A lot of people enter around these levels and then start crying on the why what happened with us. No institutional sellers came into the market. How the hell you can sell it here? You're investing your. Imagine I'm opening 50 lots here. Then what? Can I open a 50 lot on a basis of prediction, assumption? Absolutely not, right? So institutional sellers came here, break of the trend line. See, I'm just showing you candle by candle analysis, not using Fibonacci at this stage, guys. Imagine when I will add my Fibonacci, which is the webinar I gave. Imagine what I'll be doing on this chart, these charts. But remember, Fibonacci is secondary analysis. Which is your prime analysis? This is your prime analysis. Understand? That's what I was always saying. This is your bloody prime analysis, bloody prime analysis, bloody prime analysis. Focus on this. And remember, it's not easy to focus on this because there are a lot of hindrance. Remember how hard on this to focus. You need to precisely monitor the market. Yes? A little deviation in attention on the other items will straight away fuck your the trade. Yes? Apologize my language, guys, but this is a motivational language. I think these words sometimes really are effective. That's what I observed in normally. Honestly, politeness never always works. I think you need to get out of the norms of morality at times just to make your point clear. So price breaks this controlling candle. That is your controlling candle. Next candle, I'll open up my trade on this candle, guys. Obviously, I'll open up before, but remember, you can open up a new trade after this candle. Understand? Next candle, rejection. Next candle fails to break the high of the controlling candle, right? Market went down. Yes, guys? Mark your reference line. Blind. You should, in the beginning, it's just blind. Wait for the first retracement. This candle, weak. This candle, bearish, bearish, bullish, bearish, fails to break. Bearish, rejection. This is bearish. Guys, even though this is rising, but do not be scared. None of these candles represent buyers are in the market, guys. This is the first candle representing a buyers. You need a follow-up, guys. Is there a follow-up here? None of them. None of them follow up. Follow up has to be like this. Significant proper follow up. Makes sense? Not like none of the candles sustain the trade. And then suddenly what happened? It did not break the controlling candle. And also, guys, there is no follow up here. Weak candle, weak candle, weak. This is the first candle. I wanted to see a follow up like this. You understand, guys? There isn't any. Now, when the price makes the first correction, just use this and that is it. Now remember, as long as the price remains below this, guys, you don't even need to do candlesticks analysis. Go back to beds. Go back to your bed. To be honest, go back to your bed, guys. You'd have to close the trade. Resistance is there. Tell me. And this is what I say, trade with the trend, right? But then let me take you back to candlestick analysis. Bearish, 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 right? Rejection. Now after seeing this rejection, bearish, I won't close the trade. I won't close the trade. I won't close the trade. This is the bullish. Bulls came in, right? I want to see the follow-up. This was the follow-up, right? So remember, guys, I'm telling you, remember this. You will always have a follow-up here because the price has to go and test the resistance level. Common sense. So normally when you see this, you can exit your trade here, guys. How many pips? 154 pips, guys, right? If you're a swing trader, you will stay in this trade unless the price breaks this, right, guys? Right, guys? But then you're not a swing trader. You need to get out of the trade here. Makes sense? And remember, guys, mark your support level, the low. This is what I teach you, right? Now see this. First you'll have this. Exactly. Let me tell you something. Do not make So many lines on the support level. This is your support level now, right, guys? Market went up, fails a follow up, right? You can sell it here again if you want to on this bearish candle. Can you see this bearish candle? Remember, guys, remember, this is a downtrending market. This was the correction, right? Resistance was right there. You need to follow up. No follow up further, right, guys? No follow up, right? Stay in the trade. Boom to the downside. Price has to break this to go to the downside. We are following the candlesticks, candles. No, there is no follow up. No follow up, right? 1, 2, 3, 4, 5, 6, 7, 8. All these candles are weak holders moving the market to the upside, guys. Remember, no institutional sellers. Remember, buyers, because this is your controlling candle. Make sense? Make sense, guys? All these candles are weak, completely weak candles. And I already knew that they will weak holders, sellers are taking a break. Weak holders, buyers will move the market near this resistance. Exactly that would happen, right, guys? Right, guys? Further confirmation. Break, boom. Break of this, boom. Can you see, guys? None of the candle is bullish. All these candles are bearish, guys. I don't have to explain it to you. Right, guys? I know I can exit my trade on this. I can exit on my trade because remember, reference line, break, I exit my trade because I know market will go here now. I teach you guys this. If you're a swing trader, you'll stay in the trade. Make sense? Make sense, guys? 1, 2, 3, guys, and suddenly what happened? This spike. This is the trade I took the other day when I was giving the webinar, guys. Right, guys? Strong rejection. What I teach you guys, strong rejection. This candle fails to break the high of the previous candle. Sellers, 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 sellers. Close here because that's a support level, guys. Can you see how many pips? 124. Remember, guys, let's say if I'm in my trade from this candlestick, no reason to close the trade, right, guys? Let's see how many pips I've made. 301 pips, guys. Makes sense. So, guys, you need to use candlesticks analysis in conjunction with double tops, double bottoms, in conjunction with support and resistance. Very important. Combining them together. This was the follow-up example, guys. Do not take me wrong. This was the follow-up. One candle and then second candle. If you are in your trade, you may want to exit your trade, guys. This is the follow-up. Where is the follow-up? Accepted there is a follow-up. This is a classic example of a follow-up. Understand, guys? Let's say if I exit my trade in follow-up, exit your trade in your follow-up. Leave it. If you're a swing trader, you might want to exit your trade. But remember, if you're a swing trader, you don't exit your trade. You stay in this because of this. Make sense? If you are an intraday trader, then you'll exit your trade. And remember, guys, remember something, which is this. The price fails to break the high of this candle, so you can take a trade on this candle, the next candle again. But if you ask me where is the example of a follow-up, guys, this is a classic example of follow-up. Remember, it happens on the support level, right? These candles, what this candle represents, this candle is what? Rejection on which part? Buyers, right? Buyers came into the market, yes? Look at the rejection. You have to close your trade if you're trading intraday. Right, guys? You know there's going to be a correction, buyers. The next candle fails to close the low of the previous candle, right, guys? The next candle even fails to close of the previous candle, right, guys? Fails to close the low of the previous candle, right, guys? And this is a bullish engulfing, right? Engulf the previous candle. Who is in the market? Buyers are in the market. But remember, this is your counter trend trade. Remember this. Remember, counter trend trade would not last for long. Exactly that what happened. Went up near the resistance, fails, right? Makes sense. So on these candlesticks, by using candlesticks analysis, obviously you'll be buying, not selling. Make sense, guys? Clear? Money, able. By using candlesticks analysis, guys, you can kill the market every day. I do not fear when I trade. So I teach you today using candlestick analysis how to enter the trade. Entering the trade, always use double bottom, double tops, guys, and trend lines. Enter the trade. There are three options you can enter the trade. Aggressive entry, on the double bottom entry, after the double bottom entry, or after the double bottom, the break of the trend line entry. Three entries. Third entry is the best one. And remember, guys, how to enter the trade, how to hold your trade, control your trade, and how to exit the trade. Understand, guys, completely. You need to understand what I'm saying. Understand completely. Say yes to me. I want to see the capital letters yes, guys. So I know you really understand. Good. Now, guys, your homework. There is no lecture until Friday for you guys. And next week, all of you guys are hitting demo accounts for 2 weeks. Next week, the week commencing next week, not this Monday, the upcoming Monday. Make sense what I'm saying? On next weekend, I will give you a small lecture on supply and demand and divergence, which is a very small lecture. It's not an in-depth lecture. So all I have to show you how to mark supply and demand on your charts and explain divergence. So that is, yes, exactly, 31st. Exactly, you are hitting demo account on end of the month, not this Monday, the following Monday. For 2 weeks, all of you, I'll give you exact instructions. I'll give you a small lecture before that, explaining you exactly the rules to follow. Yes, Boston. Yes, Boston. Can go over little it next week. Mine turned down. Can't hear missing. Boston, I'll send you a recording of it. You can see the recording. That should not be an issue. I'll send you the recordings of this, guys. This training session. Okay. Yeah, that's fine. Fine. Better. Thank you. Okay, guys. Let me finish what I'm saying. So you guys now need to practice this, guys. Now let me tell you, you need to practice this on your charts for 5 hours, 6 hours every day. If you practice for the next 5, 6 days, then trust me, you'll become a trader, guys. The more you practice this exercise, this exact exercise, the more you practice, trust me, the day you hit a live trade, you wouldn't have any fear. This is called pure price action trading, naked charts, guys, without anything. And with this, you should be able to make the pips on the demo training. Then I will add Fibonacci, I will add expansions, I will add harmonic patterns. But you don't need those ones to trade successfully. You understand why I'm saying this? Why I'm not adding those and taking you guys to demo training, because you need to focus whilst you're trading on these things. You understand? This is the focal when you're trading. People forget this. They start focusing on other things, focusing on the harmonic patterns all the time. Makes sense? Are we clear on this? So guys, get on with your training. I show you the examples, I show you the training. Get on with your training, guys. Send me your charts. But training, you obviously you'll send me your chart, but training has to be candle by candle analysis, guys. Candle by candle analysis. You understand? Has to be a candle by candle analysis, guys. Remember, each candle by candle analysis. You do not understand? Take a picture, mark, send it to me. I'll give you a response because I know a depth analysis of this candle. I know the behavior of this candle better than you guys. I give you a brief understanding how to use it. Any questions before I end this training session, everyone? And tell me, do you really enjoy this session? Has it not changed your perception towards the market, approach towards the market? Amani, you've been trading for a long time, brother. Tell me, does it not make sense? It gives you control over the market. You are not gambling and predicting anymore. You're controlling. You're following the market. Following the market. Make sense? Great, man. I want to see your guys' remarks. Yeah, you should have fined me 3 years ago. That would be better for you then. So, get on with your training, guys, on this, and send me your charts. I will mark them. Okay, guys? Let me close the recording, then I'll take your questions. Thank you very much, everyone.